All right. So, welcome back. We're going to be talking about chapter 9, which is time and billing. So, if you remember very, very briefly, we touched upon this in chapter 4 and chapter 2. We talked about customer jobs, okay? If you remember very vaguely, this chapter is all about customers and their jobs because this is what we use to assign our expenses and our income to particular customers or jobs. So by what I mean by this is we're actually assigning a customer. So the whole purpose of having a reimbursable expense or an income is to pass the expense or income along and bill your customers. So this is where we are going to be attaching our expenses and our income to particular individuals, in this case, our customers. So we're going to take a look at how that works, all right? They don't mention customers / jobs very much in this chapter because it's something you're supposed to learn in chapter 2 and 4. But they gave us a small paragraph and didn't really give us a real example. So, with that being said, this is where chapter 9 we actually take a look at how we actually use customers / jobs and assign those bills or etc. to those exact customers. So, first off, let's go ahead and talk about what this even means. So, first thing that we're going to be looking at is going to be reimbursable expenses. So, it's pretty straightforward as far as understanding what the terminology means. You are being reimbursed for an expense, right? To us, as an expense, as for the company, that means we have to pay for something in order to have a service done or complete. It's an expense to us. So therefore, a reimbursable expense is going to be something that we either have our customers pay for it in terms of providing this service for them, right? So that's why it's reimbursable, because first off, we're going to pay this expense ahead of time, right? And how we charge our customers or we bill our customers is we're going to tack on whatever expense that we already paid for, and on top of that, a little percentage, a little markup percentage, because, we need to take some portion of the money, right? Or accept it as commission. All right. So this is exactly what a reimbursable expense is in detail for, or, entails, excuse me. So it really means that we're going to be paying for an expense and the customer's going to pay us back for that expense. So we're going to be reimbursed. And this can also apply to if you have employees, right? If you allow them to have the notion that, let's say they need to do travel expenses, right? They pay for their gas and they bring back us, or they keep track of their mileage and they bring it back to us, right? And we would have to reimburse them with a reimbursable check. So that's also going to be considered one of those reimbursements that you can do. But for this example, we're going to actually be taking a look at expenses that we paid for and have our customers go ahead and pay for it for us. Okay?
Okay.
So in this case, let's talk about what you can use a reimbursable expense for, okay? So you can do it for other current assets. You can do it for cost of goods sold. You can do for expenses and other expenses, because hence the word reimbursable expense, right? So primarily it's going to be an expense that you are incurring and you're having someone pay for it, okay? So that's what you can do for reimbursable expenses. So let's go ahead and take an example for the first example, and then we'll talk about this billable expense window in a second. So first example that we're going to take a look at is going to be that we are going to write an expense. Okay, we're going to pay someone for an expense that we provided. Okay, for a customer. So in this case, I'm going to go ahead and write a check. All right, so tell me, how do I write a check?
So you're going to go to the right, you're
Mm-hmm.
going to go to the banking section,
Mm-hmm.
do a right check.
Mm-hmm. What do you call this platform? Or what do you call this graphic depiction? What is
It's,
this
ju-
called?
that's your chart of accounts.
Not your chart of accounts.
Well, it's your home page.
There you go. Okay, so you have to be very specific because QuickBooks is also going to be very specific. It's going to tell you in
Okay.
detail saying, where did you write a check? You're going to write the check using the write a checks icon in the banking section on your home page. Okay,
Okay.
so that's one
Okay.
way. What's the second way that you can write a check?
Uh, you can go to the invoice in uh, the on customers. You can go to the invoice in the customer section on the homepage.
Okay, so invoices is not the same thing as writing a check. Okay,
Okay.
invoices is us billing our customers. My question to you is, I want to write a check, whether it's to a customer or to a vendor or just to a random person, maybe my employee. I need to write a check. Okay. So
Okay.
it wouldn't be an invoice. That's going to be something that you're billing a customer for. In this case, I'm writing a check to a vendor.
Okay. Well, then if you're in vendors, you can either do it from there.
Mm, no. Okay,
Well,
so
I was going to
I'm
go.
going to give you a hint. It's going to be under banking.
Uh huh. You're going to go to write checks.
There you go. Write checks. So this is banking on the menu bar. Write checks. So here we are. So in this case, we're going to go. We actually had to pay for an expense to provide for Miss Maria Cruz. So I'm sorry, Miranda's Corner.
Okay.
So in this case, we used, make sure that you're on your checking account. That's always
Right.
important, okay? Because we're taking it away from our checking account. The numbers don't matter. I'm going to say I'm going to print this check later. Okay, so I'm going to print this check later. So therefore, I'm not going to assign a number. So first things first is, who am I writing this check out to? In this case, I'm writing to Express Delivery Services. There they are, Express Delivery Services. Okay, all my information is populated down. And I'm going to say this transaction was actually done on the 3rd of February, I believe. Not 2021. We have to go back a couple years here. So we want to do February 3rd of 2019. Okay? And here, I'm going to say, so the account that I'm going to be utilizing is going to be, I believe it's write a check, expense delivery services. So it's going to be delivery service. Or in this case, it might be service. Let's see what the book says. I didn't write.
Document delivery.
Yes, but what is the account that we're using?
Reimbursable expenses.
There you go.
66
There you go.
66 900.
Okay, so we decide to categorize this as a reimbursable expense because we are going to expect that someone else is going to pay for it. So in this case, my account is going to be reimbursable expenses. Reimbursable expenses. There you go. Perfect. All right. And this is a document delivery. Document delivery. Okay. So again, we have the account. Now the amount is going to be for $20 because we're going to charge them because we have to ship out first class in a big private envelope, sealed, right? Because this is, maybe it's a contract, whatever it is. I'm sending a document. It's going to cost me $20. And the memo here is document delivery for Miranda's Corner. Okay. And then of course, now here's the thing that we need to take a look at. Over here on the right side, we have customer/job. This is where we are going to be tacking on or assigning this person. Okay, so I'm going to say that this particular cost, right, or this expense, I'm going to go ahead and forward this bill to Miss Miranda's Corner. And then the next thing you need to see is this little window right here. It says billable, all right? And you want to ensure that this is check marked,
Okay.
okay? And I believe the class is Walnut Creek.
Yes.
All right. So now that I have this section right here, I'm gonna validate that I've already paid this expense already. Right. I'm writing a check to this to Express Delivery Services. So I'm already paying for this expense as is right here as of the date of the 3rd. Okay, and it's for $20. And I'm gonna go ahead and save and close. Okay. Now that I got that beep of approval, now I can go ahead and bill my customer for that service. So if I go ahead and create an invoice, right?
I think I
And
was jumping ahead a moment ago. I'm sorry.
no worries. Don't worry about it. Don't worry about it. So here, I'm going to go ahead and type in Miranda's Corner because that's the person I'm going to send this bill to. Once I do that, I get this window. It's called the billable time slash costs window. All right. So here it says that, well, hey, Miss Miranda's Corner has something that's billable. All right. You assigned a billable expense to this particular person. Would you like to select them or would you like to exclude it? In this case, we want to select our billable options, and I'm going to click OK. So once I click OK, notice this. We have 3 tabs to look at, okay? We have our time tab, we have our expenses tab, we have our mileage tab, and we also have our items tab. So that means throughout this entire lesson, we're going to take a look at time, expenses, and we're also going to take a look at items. Now for mileage, okay, that's between, if you offer travel expenses or not. So that's between us and the employee. You wouldn't charge your customers for mileage unless it's going to be tacked on as a bill because for example, if you're going to have them fly out to a specific location, that's definitely going to be included in the cost. It has to be. All right. So in that case, then yes, you'd be able to bill them for that. So once we've done that, now notice this. My time has nothing in it. There's 0. My expenses has 1. So if I click my expenses tab and look, I have the reimbursable expense right here from Express Delivery. And I'm going to go ahead and check mark that. Now, the next thing that you want to do is because this allows you in this particular window, in my expenses tab window, it allows me to mark up the price. All right? Because one thing that you want to learn too is when you're doing business is if you're paying forth an expense for a customer for providing a service for them, you should charge a higher rate. So in this case, I'm going to mark up my value by 20%. All right. And this account is something that you have to create if you plan on, charging your customers more than what you originally paid for. In this case, this is going to be markup, markup expense or expense markup. All right. That account. Once you've selected this, notice this. It's $20, but now it's going to be $24 because it's marked up. It marked up 20% of $20. All right. And then I'm going to go ahead and click OK. And notice this. It actually tells your customer that you marked them up 20%. Now, general rule of thumb, you should never, ever, ever, never, ever do that. But in this case, it's because I want, in this particular example here, I need to make sure that you know that you're charging your customer 20% markup. I need you to understand where that $4 came from. But in this case, yeah, you would never ever tell your customers that you charge them extra money. They're going to be furious. All right? You just tell them straight up it's going to be $24, right? Cuz you're giving them a hidden fee. Okay? They don't know they're getting marked up, and they don't know what your expenses it costs to take to in order for you to have the services done. So in this case, you wouldn't have this showing up at all. But for this example, I just want to make sure that you understand where this markup is coming from. Okay, so in this case, because it's a service, obviously you don't get taxed on it. So that means this person owes you straight up $24. Okay, even though we paid $20, we're getting a $4 profit off of that. Okay, because it takes energy to have to call these people up, and tell them to do a job for us. Okay, so we're tacking on some hidden fees and some labor costs. So again, we're going to say thank you for your business, and we're going to say for the memo here is document delivery charge. Okay. So again, that's how you assign a billable expense, a reimbursable expense. So in this case, I paid for $20 to provide the service, the delivery service. Now, Miranda's Corner has to pay me $24 to cover not only my expense for the delivery fee, but I'm getting $4 profit for initiating. I'm the middleman. I need that $4 commission. You can put it. You can think of it that way. It's a $4 commission. Okay, and I can go ahead, click save and close. And that's how you do a reimbursable expense. Straightforward and easy. All right. Any questions? Any questions? No questions?
No, I'm sorry. No,
Okay.
I was reading something else here as we were
No
going.
worries. No worries. All right. So again, that's how you create. You first have to create the expense first, okay, or pay for an expense first, and make sure that you tag it as a reimbursable expense, okay. Then the second thing you gotta do is now you gotta make sure, or the first thing you gotta do. Oh, okay. First you gotta do is you gotta create the expense, right? And
Right.
down at the bottom, you need to assign it to the particular person that you're doing the job for. And you want to ensure that you do want to check mark that it is billable. So you can pass along the bill to the particular person. All right. Then the third thing you got to do is now you got to create an invoice to charge your customer for that particular expense that you're trying to get reimbursed. So once you send that bill out and they pay you, you can choose to either mark them up, or if you don't want to mark them up, it's clearly up to you or up to the business. So if you choose to not do it, then you don't have to place the markup. But in this case, you definitely want to charge your customers a little more for the convenience of having you to have this person. So that's the three things that you got to have. You got to create the expense first. Second is assign the customer/job. Make sure it's billable. Then third is create the invoice and tack on all the expenses that are entailing to that particular customer. And that's it. Okay?
Okay. I think I
All
got it.
right. Good. All right. So now the next thing that we want to talk about is actually activating how time and reimbursable expenses actually work. So if you don't have it already already activated, what happens is that, notice this, right? Notice that every time I create a bill or create an invoice, right? If I create a bill, or let's say I create a bill, right? I have this customer/billable column right here, right? I have this activated, all right? If I want to deactivate it, or if I don't want to assign or tack bills to particular people, then I'm going to go ahead and go to my edit, and I'm going to go to my preferences, because it is a preference that we set. Now, It's going to be under time and billing. So you may have to go down. So time and expenses. And what you're going to do is make sure that you're on your company's profile. So first thing it's going to say is, do you keep track of time? We said yes. All right. Now the next thing is going to be make all time entries as billable. Okay. So that means for every single thing that we use, right? It's going to have that billable little column. All right. If I were to unselect this, that means if I were to treat time or enter in time, it wouldn't be billable. Okay. And then the second option here is going to be for invoicing, right? Invoicing option. So make reimbursed expense as income. So we talked about this. When you are creating a reimbursable expense, you technically cannot make it as an income account because it says so in the box. However, you can assign to collect the reimbursable expense as an income. All right, so there's a difference between there. You cannot create a reimbursable expense as an income. But what you can do is you can collect the reimbursable expense as income. Do you kind of get the difference there? So one, you can't create it as an income, but you can collect it as income. Okay. So that's what this section is for, is to ensure that you have your reimbursable expenses as an income. So again, if you do have it assigned as income, right? That's why it's check mark. It's actually going to be for the account called reimbursable expense. In this case, I have the markup account, so markup account is fine. There is, because the one thing that you want to make sure is that every time you use the reimbursable expense account, it's not going to, you're going to collect it or redeem it as an income. That's all that this little check mark is asking you to do. Okay. So if you were to unselect it, then that means every expense that's reimbursable is always going to be an expense, and when you bill your customers, it's going to be expense. It's not going to be collected as income. So that's why it's important that you do check mark this, because if you are marking up your values and your prices, therefore you should collect it as income, because at that point, right, you're not only are you charging your customers enough to cover the costs of your expenses, you're also profiting off of that. So you definitely want to collect that as income. All right. And of course, you can also set defaults for when you do reimbursable expenses. You can have a default saying, everything that I do, whether I'm going to make it a reimbursable expense, it's going to be automatically marked up at 20%. I can make this 25%, 30%, 40%, whatever percentage I deem to be valid or fair. Okay, so most markups can be anywhere from 10 to 25%, but I've never seen something that's been way overpriced, such as a 50% markup, because you always have to also consider, like, if the bill was $20, right, and you're gonna mark your customer up $10 extra on top of that, most likely they're just gonna go to your store and say, you know what, if it's gonna cost me $30 to deliver a document I'm just gonna go to your store and just sign the papers right then and there. So you know what I mean? So you want to be careful on your markup value, especially when you're dealing with reimbursable expenses. But of course, if you are selling a product, marking up, you can determine whatever markup value you want to mark it up as. Okay, it could be 100%, it could be 200%, whatever it is. Okay, as long as you are aware that whatever your price is, that the customer is willing to pay for that price. Okay. So again, so in this case, I'm going to make it standard throughout every single one, that everything I pay for in advance and I'm going to get reimbursed for, I'm going to mark it up 20%. right? And its default location will be the expense markup account. So I'm going to go ahead and click OK. So that means now every time I have this, it's going to automatically be marked as billable unless I choose to make it unbillable or don't pass the bill along. Okay.
Okay.
So that's what that setting was. It's to ensure that you're going to mark everything as billable unless you actually physically uncheck mark it. Okay. So that's activating time the billing the time and billing feature. All right.
Mm-hmm.
Now the next section here is going to be talking about two-sided items. Now, we've seen two-sided items before, right? It's
Yes.
the best way to take a look at an item, and you can dual use it as an income and an expense account or item, right? So that's
Mm-hmm.
that's the whole idea of of a two-sided item. It's not just only meant for just expenses, or it's not just only meant for income. It can use for both. And that's exactly what this idea is. Okay, so as we've seen before, right, without knowing it, we've been using two-sided items for a while, right? Every inventory part that we create, every non-inventory part, every service item we do, right? It's tacking on a cost of goods sold, which is an expense account, and it's also tacking on an income account, right? You can apply it on both the billing information, and you can also apply it both on the sales forms. So that's a dual feature that QuickBooks allows you to do. And by using the dual feature, it allows to do the accounting behind the scenes, and it allows it to do multiple transactions, multiple debits and credits. They're moving across the board simultaneously. Okay, all in one transaction. Okay, so that's the idea of a two-sided item. Now, what can you use a two-sided item for? We've already experienced it before, but here is using it in terms of billable or reimbursable expenses. Okay, so in this case, there are three options that you can take a look here for. So the first one is going to be reimbursable expenses. And we actually got to take a look at that right above, right?
Mm-hmm.
We got to take a look at the item or the account, which is the reimbursable expenses. But in this case, you can use an item such as, let's say you purchased an item for a particular customer or a service, right? Let's say you provided a service for your customer, right? So in this case, we provided delivery services. You can use that on both an expense and in a sales form, which in the particular example from above, we got to take a look at us using it as an expense item, right, or an expense, and then we got to bill the customer for that expense. All right. So not only are we using it as a cost of goods sold, we all are an expense, which is the cost of goods sold. We also use it as a sales itself as well. Okay. So again, the reimbursable we just already took a look at. So the example is right above. So we're gonna focus on the other types of two-sided items. Okay. So the second one is going to be doing custom orders. So when we make purchases for particular customers, that's where we can go ahead and build them for those type of those type of items that we purchased, right? Because we're not buying it for the store. We're buying intentions because this particular customer wants a specific item. Okay? And if this customer wants this specific item, then we have full range to go ahead and mark them up at a higher value because, again, they're using us as their means to get something from another person. they're using us as a middleman.
Right.
Okay, so because we have to do all the hard work, labor, and to call them, do a purchase order, we got to charge our customer a higher percentage, right? That's true of most and all, clothing stores, right? Or any retail stores, right? They mark you up for something that you're trying to make a particular purchase order for. So in this case, because in this case, excuse me, that's what we're going to be looking into when we talk about custom orders. Okay, we're actually going to be creating a purchase order, and we're going to make a purchase for our particular customer. All right. And then the last one is going to be subcontracted labor. Subcontracted labor is pretty straightforward, right? In our company, we have a bunch of 1099 workers. And because we need to call them and ask them to get a job done, what you can do is you can, this is also in terms of a reimbursable bill as well. But in this case, if they are a 1099 worker for us, right? So they work for us, right? But they are independent contractors. So because they kind of work for us, what we can do is instead of having it as a reimbursable expense, I'm not going to pay them. I'm not going to pay my 1099 workers. I'm going to go ahead and pass the bill on to my my customer, and they're going to pay for having me get my 1099 workers to complete their service. So that's what this is right here. Instead of us paying our subcontracted workers or our 1099 workers, we're just going to have the customer just go ahead and pay for them. So let's go ahead and take a look at custom orders. Okay, so first things first is we have to go ahead and create the item. Okay, so in this case, how do I get to my items list?
Sorry, I was still taking a note.
That's okay.
Okay, I'm gonna go to where's the item menu? Why am I not? Okay, go to the company and go to items and services.
Company where?
Over on the homepage.
On the homepage. Good job right there, right? Where's the second way that you can get to the items list?
Let's see, we're setting this up as this is where I get confused sometimes.
You need to know every single way.
Yeah.
Where else can you find the items list?
Maybe in the let's see, customers.
Not customers.
Vendors?
Not vendors.
Wow, why is this not coming to me today?
Let's listen carefully. Where can I find my items list?
Oh, I'm sorry. Go to lists.
List, there you go. List where?
Up on the top menu bar.
Menu bar, good. List under the menu bar. All right, and there you go. Items list.
Item list.
Perfect, good. All right, so how do I create a new item?
You're going to click on your item list.
Okay. Click where? Or do I right click, left click? What am I doing on my items list?
Left click.
You can left click. I mean, right, okay, left click. Okay, left click doesn't do anything.
It did on mine.
Left click? You mean right click?
Okay, I'm on the items list, right? And I
Yes.
left clicked it and it pulled up an items list.
Okay, no, my question is how do you create a new item?
Oh, did you still have to? Okay, if you're creating a new item, though, you want to go into I'm having trouble today.
Don't worry about it. It's okay. I have to ask you these questions because my
I
question
understand.
is, yeah. Okay. So how do I create a new item? Okay. Try right clicking anywhere on the items list. What do you see?
Oh, jeez. Okay.
New. Okay.
Yeah.
But the one that they want you to for surely do is what happens when I go down to the bottom window where it says items in that little drop down little triangle? What happens if I press that or click on it?
Oh, right down there where it says item, it's going to bring up if you want to do a new one or
Mm-hmm.
anything else.
So I'm going to go ahead and press new, and I believe this is going to be an inventory part.
All right. Yep, second on the list.
Okay, so in this case, I'm creating a custom camera.
Okay.
Okay, and then description is pretty straightforward, a customizable camera. Okay. Now here it has to be considered an item. Okay, so my cost for the item, right? I'm gonna leave it blank because I don't know what the cost of the item is gonna be, right? I have to go get a quote from the actual vendor. All right. So
Okay.
I don't know because it's a custom camera, right? What if I want a Nikon 350 zero, right? I don't know how much that's going to cost me. I have to ask my vendor because if my customer is going to say, I don't want your camera SR32, I want the Nikon 350 SR, okay? Or let's say I want a Canon digital Canon 500 QS, something like that, right? There's going to be different models and different things. So if this is just a custom camera that you're particularly buying for a customer, you're not going to know what the price is going to cost you. Okay? So we're going to leave that 0. Okay? However, it's still going to be considered a cost of goods sold because essentially you're selling this item to your customer. So it's still going to be cost of goods sold. However, preferred vendor, it will depend on who your vendor is. If one of your vendors can get any single camera no matter what it is, then or if you have a preferred vendor, right? Let's say it's your go-to person for everything, then you can go ahead and place it here. In this case, Ace Supply is going to be my go-to vendor. They're going to have everybody and everything there. Okay? Now, of course, selling price falls under the same category. If you don't know how much the camera is going to cost you, how do you know how much to charge your customer? You don't. So in that case, I'm leaving it at 0, okay? I'm going to have it so then when I do make my purchases or when I do have my invoice, I can go ahead and tack on whatever value that I feel that is appropriate to sell my item. All right, and we want to make sure that because it's an actual camera, it's an actual product, this is going to be attached to sales. Okay, and another thing here is I don't know, how many I'm gonna need. So in this case, I'm just gonna leave this all blank right here. However, because we're making a purchase of a custom camera, you are allowed to place it into inventory. Right? It's going to be something that's going to go through inventory. When you sell it, it's done, it's gone. Hold on. Let me see if that is correct. That it's not a non-inventory part. I think it's a non-inventory part. Nope. New inventory part is what I have here. Custom orders. You're creating a new inventory part. So there you go. I have everything set the way it is. And I'm going to go ahead and click OK. Okay, so there you go. I created my item for the custom camera right there, right above camera SR32. Okay, so
Okay.
now the next thing is now I'm going to go ahead and create an invoice. I'm sorry, create a purchase order.
Right.
Okay, I'm going to go ahead and create it. Okay, so let me go ahead and close this out. So, all right, I'm going to save you some trouble here. So I'm going to go ahead and create the purchase order for you, okay? But however, I'm going to ask you how to do the rest, okay? So in this case, my person that I'm buying is Mr. Ace Supply. And for this class, it is going to be for Walnut Creek.
Right.
All right. Your PO number is whatever you want to make it. So in this case, it's going to be 2019-1. All right. And what
Okay.
item am I going to purchase? I'm going to go ahead and purchase my custom camera.
Right.
All right. I'm only going to buy one. So now that I actually got a quote from my vendor, or they have a catalog or something like that, right? I know that this camera, let's just say it's not a camera SR32. It's probably the camera SR45. It's the newest and latest model. Okay, let's
Okay.
just say. So in this case, I found out that it's gonna cost me $398.
Right.
Of course. And then it's going to give you saying, oh, hey, this custom camera, you changed something on there. Do you want to? And I'm going to say no, because you don't know. You can't. This is just one camera, so you don't want to save changes to your item itself. So we're going to ensure that it's just $398. All right. And then here, you don't need to place your customer just yet. You do it when you receive the bill. Okay, but you can do it if you'd like. It's not, that way when you receive the bill, it will do it for you, or it will pop up that you're going to bill him anyway. But in this case, you don't need to. So in this case, I'm going to go ahead and say, thank you for your business, or thank you for your business. And then I'm going to go ahead and write here, down here, memo. Camera. What did I say? SR 45.
45 or whatever. Yeah.
Okay, we'll just say it's the camera SR 45. All right, and I validated that I'm making the purchase on the 3rd. All right, and it's for $398. So I'm gonna go and save and close.
Save and
Okay.
close.
Now the next thing is, let's say the day after, they decide to send me the camera, right? Maybe the store's like right there. So now that I've already ordered it and I received the items, I'm going to receive it with the bill. So how am I going to receive the inventory with the bill?
Well, you're in your vendor, so you're going to go to enter bills.
Enter bills. No. Look at the flow of transactions. What comes right after the purchase order?
You got your estimates and create invoices.
That's down here. We're talking about up here. Purchase orders.
Okay.
Flow of line. What's next after?
Okay, you're going to be going to your enter bills.
And no, that's down
Oh,
here.
you received your inventory. I'm sorry.
Good. Receive inventory. Okay. Now the option is with a bill or without a bill.
Well, you've gotten a bill, so it'd be with the bill.
Yes. So here you go. Now we received the bill. And the bill is from Mr. Ace Supply, right? He charged us for the purchase order. So again, by clicking this, it's going to say, hey, are you referring to this purchase order? Yes, I am. So I'm going to go ahead and take that purchase order and click OK. Now I see this right here that I am getting billed, right? And I'm going to make sure it's the day after, because realistically, you shouldn't receive it on the same day. Reference number is going to be whatever bill number that you have on there. So I believe it's 1, 2, 3, 4.
Here.
Okay, and here is where it's important that you need to do. Who did you buy this custom camera for?
Was
I bought it for Maria. Yes. Now, Maria Cruz has two names, right? There's one for just her herself, and there's one for the branch opening in particular. So in this case, it is definitely going to be for the branch opening. Okay, so Maria Cruz branch opening. All right. And because I did that, it selected that, do you want to bill this person? And yes, you want to ensure that this invoice or this bill right here is going to be passed along and sent to Miss Maria Cruz. So I'm going to go ahead and click Save and Close. Okay. Now, how do I create an invoice?
pay bills.
Not pay bills. We're not paying bills. We're creating an invoice.
That's. Oh, okay. We go down to create invoice. Wait a minute.
Yeah, that's right.
Okay.
Good. We're creating an invoice because now we have to send Miss Maria Cruz a bill.
Hooray.
Right? We gotta charge her money now. So in this case, I'm gonna go ahead and type in Maria Cruz. Make sure it's branch opening. Once you do that, now we get that billable window. And it says like, hey, would you assigned a bill to this particular customer. Would you like to select it or would you like to exclude it? In this case, we want to bill her.
Right.
So again, I have nothing in my time. I'm not charging for time. I have nothing in my expenses. I have nothing in my mileage. However, I have something in my items. And in this case, she bought a camera from me. So I'm going to go ahead and click on this and say, yeah, I'm going to charge her for this camera. But notice this, I have no markup value. Okay, so that means I have to manually mark it up. All right, so I'm going to click OK. Well, one that we know for sure, it's because first off, we didn't even know what the price value is going to be.
Mm-hmm.
Okay, we just assumed that the camera, we have to look at the model, we have to look at what they want from us or what the exact model is and how much it costs. So we had to do our research or we had to look at the catalog. So in this case, we know it's $398 now. But because we are on her billing information, right? We can now mark her up an additional 20% because we want to charge her additional for that. So right now, it shows that right now it's $398. So again, this is where we can do our quick math. If I go ahead and highlight this number, right? If I go ahead and type in my little asterisk or my multiplication, it's going to create a tape receipt. Okay? And this is where it's doing quick math. So in this case, I want 1 plus 20%. That's how you mark up the $398 and also add on top of that 20%. So if you just did only 20%, it's only going to show you 20% of the $398. But in this case, I'm doing 1 plus the 20%. So therefore, if I press enter, it now changes it to $477.40. And because this item is taxable and we're taxing her at the Santa Clara tax, you could see here that now it is now worth $517. So in this case, it doesn't match your book because of the taxing here.
Actually, it does.
Oh, it does. Okay, so it's 517, not 512. Okay, my bad. 517.
Yeah. So.
Okay, so there you go. Now we matched everything and we're gonna go ahead and this one, it doesn't show that we marked her up. So that's a good sign here. You never, yeah, like I said, you never want to mark them up or show them that you charge more than what you should. It's supposed to be a hidden fee. So in this case, sold camera SR 45. All right, it's taxed, and that's what I'm gonna bill her. I'm marking it up 20% because I can. All right, and I'm gonna save and close. And again, it's going to be on the next day, on the 4th, not the 3rd, because yes. Let me see. It's going to be invoice number 2019 set 107, and I'm gonna go ahead, save and close. All right. So that's how I was able to make a purchase for Miss Maria Cruz, and I went ahead and have her bill. I went ahead and billed her for it. Okay. I still get the billable information though. So let's notice this. Okay. So notice this. Even if I'm looking at my bills, right, and I look at my A supply, and I'm gonna go ahead and tap in all transactions, right? And I go ahead and take a look at that bill that we just did, right? I get to do terms. So if I want to take advantage of this and pay forth, then I can do so, right? Because at the end of the day, Miss Maria Cruz is paying me $517. Well, in this case, she's paying me $477, right? Because the rest goes to tax. That's not my money. So she's paying me $477. That is a $75 in profit in my pocket. So that makes me happy because it's covering the cost. And if I want to, I can take advantage of this 2%, regardless if Miss Maria Cruz pays me or not. I can go ahead and take an advantage of this because if I want to take an additional 10% off, I can do so by just paying it off. Because my bill is not associated with Maria's. It's not dependent on it. I don't need Maria to pay me in order for me to pay my bills. I can choose to pay my bill whenever I want to, or in this case, whatever the due date is. Okay? But because the minute we received the bill from the customer, right? I mean, from the vendor, right? We went ahead and billed Maria Cruz immediately. So therefore, her time that she has to pay us is going to be in lines with the bill that is being owed, right? They're both 30 days. All right. But the thing is, if we would like to and we have the money for it, go ahead and pay for it in advance, right? What do we have to lose, right? If it costs us $398 and we decided to take advantage of that 2%, that means we're paying for what, $390 versus versus, that means we get to pocket more of Miss Maria Cruz's money.
Yeah. Instead of the 477, you were getting the.
Yeah, we're getting additional whatever costs. So that's the circumstance here. You don't need Miss Maria Cruz to pay for the bill entirely. You're just having the expense billed to her. So instead of having to copy and paste this information from your bill to Miss Maria Cruz, it can transfer it right away. And that's what the assumption is here for. But that doesn't mean you are relying on Maria to go ahead and pay this bill. You can pay this bill for and have her reimburse you in that kind of sense. So in this case, I can make a payment to this if I want to take advantage of that discount. All right. So again, Miss Maria Cruz does not have to pay you in order for you to pay your bills. Okay.
Got it.
All right. So that's how you go ahead and do a custom order for a particular customer. Okay. So personalizing orders or tacking on a specific item that you purchased for that particular customer. Okay. All right. So that's custom orders. Any questions?
No, I'm good.
All right. So let's go ahead and take a look at the next section here, which is going to be using subcontracted labor, okay, and how we can pass along the expenses for the subcontracted labor, okay. So let me go ahead and find that real quick in my book right here. So it should be this section, not here, keep going. Okay. So, okay, keep going. All right, right here. Using service items to keep track of subcontracted labor. Okay, so in this case, we have 1099 workers, right? They kind of work for our company, but they're, how they work is we don't pay anything to them. We don't pay Social Security. We don't do anything for them. All we care for is to get them to do the job. Once they do the job, we write them a check. We give it to them. That's it. Okay. So yes, subcontracted laborers, they do have to sign a contract with you so then they know that they are working for you, but they're not required to work like specific hours, right? They are only there to get the job done when it is assigned. Okay, so that's the difference between a 1099 worker and a regular statutory worker. Okay. So in this case, our camera crew, we're short staffed, or we just prefer to pay them as independent contractors anyway, because that's what usually most photographers are. They wanna do their own pricing, or they want to do their own works, and they provide the equipment themselves, right? They determine how they take the photos, etc., etc. And what we're going to do here is we are going to go ahead and take a look at how we can make an item and apply it to a 1099 contract worker. So in this case, we're going to go back to our items list, but we're not actually going to create an item. It's already created. But what we are going to do is we're going to just ensure that it is there and that everything looks good before we use the item. So again, here, photographer is what we're looking at. We have the photographer item. If I double click on it, this is what it's going to tell me. It's going to tell me that I have photographers, there's photographers. Do I have a preferred vendor for my photographers? In this case, I have a bunch of 1099 workers. I have Mr. Wong and Son, right? They're videographers. I have East Bay photographers. They are there for primarily taking pictures, okay? Or, I even have a staff person working, Mike Mazowski. He's our main guy. But however, if this person is asking to have at least 6 or 7 photographers, I need to go to a 1099 contractor to be able to, have as many people staffed to be able to complete the service. So in this case, my preferred vendors, it's up to you if you are just looking into one company. But in this case, I'm going to leave it blank because we can use many other people. Okay. So notice this. These actually, you know what? I'm gonna say these are for. I'm gonna go ahead and make this East Bay because my photographers come from East Bay. If I need a videographer, I'll create another service item called videography, whatever you want to call it, or video photographer, whatever you want to call it. So in this case, I am using East Bay photographers. Okay, those are my independent contractors right there. Now notice this. They only charge $75, right? However, I'm going to charge $125 because, these are my workers. This is what their price is. What I'm doing is I'm going to charge an additional on top of that because I need to, organize. I need to set it up. There's a lot of work that goes into it besides contacting them and say, hey, you got a job, you be here, you be there. That's it, right? No, there's way more than that. Okay, so I'm going to charge $125 for that fee. And again, it's going to be under services. So everything is set exactly how it is. And I'm going to go ahead and click OK. I just want to make sure that you understand and that you know that they're charging us as an expense for each photographer is $75 per hour. And this one, or $75 per person, whatever you want to call it. But I'm charging my customers $125.
25.
Okay? So, first things I'm going to do is I actually am going to be receiving a bill. Or in this case, this is what my expense is going to come to. So, I'm going to go ahead and enter in a bill. So, I receive a bill from East Bay Photographers. Okay, so East Bay Photographers. And I'm going to do it on the 4th, okay? We'll keep that date consistent. And my bill for here, I think it's 5678. All right?
Yes.
And then, so here are my items. What items did I need from East Bay Photographers? In this case, I had to, I needed photographers. Okay, and then what does that say? This item is associated with an income account. Okay, right? Because that's what we're doing. We're receiving the bill. Okay, so here I got photographers. How many photographers did this person require? For this particular person, so the Maria Cruz branch opening, they wanted 6 people. Oh, where did my numbers go?
You have photo paper on there, so that.
Okay, no. So, oh yes, sorry. Okay, photo. Okay, so see, that's what I'm saying. Photo. You can type photo, but you have photo paper here. Photographers. Okay, so here, how many photographers did Maria Cruz want? She wanted 6. She wanted 6 photographers. So therefore, customer/job is, I'm gonna go ahead and tack this onto the Maria Cruz branch opening. Right? I am going to have this bill sent to her. Right? Making sure it's billable. And of course, the class that she belongs to is Walnut Creek. All right. Now, not only did East Bay Photographer is billing me for this, they're also going to be billing me for photographers. Okay? Because Mr. Bob Mason also needed some photographers. He needed 15 photographers. Okay? And in this case, again, I'm going to bill Mr. Bob Mason for that because, you know, he cancel. What the heck happened? B.O.B. Bob Mason. Okay. And he's San Jose. All right. Because Mr. Bob Mason also had another photo shoot and he wanted to have 15 people there or 15 cameras on him to take a photo shoot. We don't know what it is. We don't know if Mr. Bob Mason is famous or not. All right. So there you go. And we're assigning it to the San Jose location. All right. So now that this bill is there, again, they're also going to allow us to take a discount if we pay within a certain amount of days. So I'm going to go ahead and click Save and Close. All right. So now the next thing I got to do is now I have to bill my customers for those photographers. So in this case, I'm going to go ahead and type in Maria Cruz. Maria Cruz branch opening. And I get this billable information once again. And I said, yes, I am billing Miss Maria Cruz for my photographers. Okay, so the photographers, right? She requested 6 of them, and I'm gonna say okay. Now notice this, it's already marked up because they're only requesting $75 for them. I'm charging her $125. So my price is already marked up because I stated in my items that that's how I want to sell these. That's the price per photographer. It's going to be $125 each. Okay. All right. So I don't have to do anything here in regards to marking up or anything here. It's already charged the way it is. Okay. And so now she owes me $700. $150 for having 6 photographers there. And I'm going to go ahead and say thank you for your service, or thank you for your business. Okay. And here I'm going to say 6 photographers. Okay. And now I'm going to go ahead, save and close. Okay. Beep of approval. So there you go. That's how you tack on your 1099 workers, right? It doesn't matter whether Miss Maria Cruz pays or not, okay? You are responsible to pay this bill, okay? These are your 1099 workers, right? So, you know, it's your duty to go ahead and pay them. Now, of course, you know, they sent you a bill, so they're courteous enough to send you a bill. But if you'd like, you can also place them on your payroll period, right? Not that you're paying them as an employee, but let's say you're going to pay them every 2 weeks or whatever it is, right? You could go ahead and place them on the same schedule as your employees. Okay.
Okay.
So if it makes it more sense that you're going to pay your 1099 workers the same day you're going to pay every other employee, then do so. Okay. You're not required to pay, you know, your 1099 workers separately. You can pay them alongside with your employees. All right.
Okay.
So there you go. All right. Any questions in regards to using two-sided items? We got to take a look at using it for a reimbursable expense. We got to take a look at when you make custom orders for particular customers. And we also got to take a look at billing subcontracted laborers and attaching them to each customer. Any questions?
I don't think so. I think I need to reread a lot of that. A lot more.
Okay. So yeah. So again, this makes it a lot more easier to send bills to your customers instead of having to copy and paste. All right. So that's what the easiest thing about this is. If you care, or if you are planning to have those kind of expenses and you want the customer to reimburse for it, this is how you do it. Okay. All right. So now that we got to talk about that,
I think I get
Right.
myself mixed up between the menu and the chart of accounts a lot of times.
Okay.
To what we need to do.
Okay, so yes, so navigation is very key when it comes into this. So we talked about this. This right here, this graphic depiction right here is just a list of all the transactions that you can do. And it's categorized by sections, right? You have your vendors, you have your customers, and you have your employees, right? This is every transaction that you can do, all right? And the difference between that and your chart of accounts is your chart of accounts is taking those transactions and designating a specific account for each one. So this is a list of every single transaction and all the accounts that are involved with the transaction. All right. So that's the difference between the chart of accounts and your actual transactions, right? The transactions is another sense of how you understand the workflow, right? If you're receiving a bill, that means you're dealing with a vendor and that you're dealing with entering a bill, which is an accounts payable, right? Because you're not paying them right now, you're paying them later, right? Same concept down here, right? If you're entering an invoice, you're essentially creating an accounts receivable. You're not receiving your money right now. You're going to get paid later, right?
Mm-hmm.
And then tomorrow we're going to talk about employees. Okay, so that's just the difference. Okay, so the difference is the home page is list of pretty much of all the transactions that you can do, where the chart of accounts is what the transaction entails, which is categorizing what happened. Am I increasing my cash flow? Am I spending my cash? Am I receiving cash? Okay, so it's every single account that exists within those transactions. Okay.
Okay.
Hopefully that gives you a little help there. Okay. All right. You can do this unbilled cost by jobs report. Again, if it's pertinent to you in this position, I don't think this is very like super necessary, because this is more of an accounts payable / accounts receivable kind of job.
Okay.
But if you were to run it, right? So in case you did have a list of jobs that you've entailed or you assigned, you can go to reports and you can go to, what is it? It should be customers and jobs. So you could do customers and receivables, or you could actually do jobs times and mileage. So you could keep track of your jobs right here. You could keep track of your items right here, and you could keep track of pretty much a lot of stuff here. So you could keep track of your time as well. But here we're more in terms of what jobs that you've actually billed or estimated, whatever it is. So in this case, we have job profitability summary. Let me see. I don't see the unbilled customer. So that probably
Yeah,
be a
it's
customer
down there by estimated jobs.
estimated jobs.
Unbilled costs by job.
There you go. Yep, unbilled cost by job. So here again, it just pretty much tells you which ones have you billed and which ones you actually received. So in this case, I have 2 bills and I've only received. So I have a bill, but I have not paid the job yet, or the job has not paid it yet. So there you go. All right. So again, here's Bob Mason. You should see Maria Cruz. We've been billing her for quite some time. But in this case, this is just the unpaid bills.
Mm-hmm.
So the other ones, like the Miranda's Corner, right? We already paid that expense. And for the Maria Cruz, right? Those are subcontracted labor and stuff like that. So this is one of those where we made a custom. We bought a custom item and we received a bill and we billed Mr. Bob Mason, and he hasn't paid for that bill yet. Okay, so that's this one right here. But as far as that, I don't think it is super necessary for that. Okay. So it is actually close to 3 o'clock. Excuse me, 5 o'clock. I already want class to end.
Oh, I wish.
So with that being